Alright YouTube, today I'm going to break down what a iceberg is, and you're not going to be able to see this on anything other than a order flow chart. Now as you can see, I'm on ATAS right now. In the last video I told you exactly about what ATAS was and also the volume profile. So you can see I already have my value area marked up. We have our value area high, we have our point of control, and we have our value area low. Now we're not going to be focusing on this area today, we're going to be focusing on this area. Now if you want to see exactly the setup that we took, or basically how you could have capitalized on this setup over here, check out the last video. But in today's video we're going to be going to the next day. Now in this video we're going to be going over a iceberg formation. Now it's not really too big on the volume area profile. Now I'm going to just go ahead and just get the volume area profile off because we don't really need it too much. We already know exactly this is our value area high, this is our PLC, this is our value area low. Now let's zoom in so that we can be able to see exactly what is going on. And before we zoom in, I just want to let you know at this area, this value area high, we have a rejection right here, and we also have another rejection right here. Let's not pay attention to this area right here. We're trying to, kind of really back test. So let me zoom in so that y'all can see exactly what's going on. All right, now we already seen we had two rejections, and now we're coming back up to this value area high. Now what is the value area high? That's basically going to be the roof. What is the roof? That is resistance. Now we failed twice at resistance, and as you can see, the market comes up, boom, we got us a pin bar set up, and the market sold off. That could have been a solid sell. That's a 7-point move with a pretty tight stop loss. Not too bad. Now personally, yeah, you could have took that, cool, but let's just go a little bit further into it. Now the market is sold off, but there was no follow through with the sellers. They kind of rejected at this area. So, and this area literally is in the middle of nowhere. So 9 times out of 10 you want to take your trades at zones, because at zones you're going to get the highest probability move and you're going to get the biggest move. Okay, I normally like to trade zone from zone. I don't like taking trades inside the middle of the zone. I don't like putting good money behind bad risk, and I just feel like taking a trade in the middle of a zone is just not a good trade in my personal opinion. Now let's go to this area right here. Now as you can see, there's no follow through with the sellers, and the buyers try to push the market up. The buyers, they technically rejected at resistance, which is that value area high. But one thing about this rejection right here is there's a ton of volume inside of the market. Like, yeah, the candlestick closed right here, but you can see there's volume right here and there's volume right here. So that's a lot of volume. Normally the volume, it's like from 600 to maybe 700-800. But in this case, this is like 1400, this is 1350. This is a lot of volume that's really trying to push the market up. So in my head, instead of taking a sell because it rejected resistance, since that's a ton of volume towards the end of the wick of that candlestick, I would have said, okay, let me wait for the next candlestick. Now as you can see, for the next candlestick, we have a very, very big active buyer, or a bunch of buyers that are trying to push the market up. And this goes into today's video, which is the iceberg, not setup, but like the iceberg, I say candlestick. Now what is an iceberg? In my personal opinion, I call the iceberg a discrepancy when it comes down to the active participants in the market. Now what do I mean by that? Normally when you're trading, when you're looking at the footprint chart, you're going to see from for the seller case, you're going to see -1 to -350. That's about normal. Buyer case is going to be 0 or 1 to about 350 as well. Now right here we have 1100 active participants that are trying to push the market up. Now the thing about where they're trying to push the market up is they're trying to push the market up underneath resistance. We already rejected multiple times, and we have another rejection. If I wanted to take a buy, this is the reason why I didn't take a buy. If I wanted to take a buy, I would simply wait for a break and retest to basically show me that, yeah, the buyers literally pushed through that resistance, came back, retested it, then we have an aggressive buyer that wants to buy the market higher. Boom, that's a solid buy. But in this case, yeah, we have an iceberg, but where is it? Like, what is the story behind it? Like, do I want to take a buy at an area where the market literally failed twice? No, I'm not going to be, I don't want to be the first buyer that's going to push the market up. In this case, you're not going to be the first buyer, you're going to be the third buyer, but you're going to be the third buyer that literally got destroyed. So when it comes down to these iceberg formations, it just has to make sense. You have to make it make sense, and the market just has to be in the right area. So as you can see, we do have the iceberg, we do have these active participants trying to push the market up, but we failed to break above that high. And then we have the next candlestick. Literally it opened right here, came up just a little bit, like maybe 1 one point, and then it started to reverse. Now as we're reversing, we can see there's another iceberg formation that literally came into the market. Now the thing about this iceberg is this happened after 3 rejections. Buyers, they got absorbed technically up here because it rejected, literally pushed up, there's no follow through, it didn't break above, and now we got this candlestick, it literally just reversed. So the buyers technically got absorbed, and now we have a iceberg, which is a discrepancy when it comes down to active participants. In this case, it's going to be active sellers that are trying to push the market up. We have over 2,000, we have over 1,000 more sellers than it was buyers that was at resistance, and we have a ton of volume. And where are we getting these sellers? These sellers are coming after an absorption and below the previous candlestick. Now as we're getting this type of iceberg set up, all these aggressive sellers come into the market, I remember it literally stayed right here for maybe like 10 or 15 seconds. I would have taken my sell literally at the 6865, exactly where these aggressive sellers are, with the volume, and I would have had my stop loss. It's cool to have your stop loss above the highs, but at the end of the day, that's a very big, that would have been a 10-point stop loss. My stop losses, I like them to be around like 4 to 5 points. Underneath 4 is cool. Underneath 4 is great, but 5, we're pushing it a little bit. So in this case, I would have took my trade 6865, and I would have had my stop loss above the buyer. So this would have been kind of a bigger stop loss trade, but you want to have bigger stop losses when you have this much volume into the market, because anything can really happen. So I would have taken my trade at this level right here as we're breaking past the previous candlestick with all the orders and volume into the market, and I would have took my trade back to the PLC. Now, the reason why I would have taken my trade back to the PLC is because I know a lot of BS happens at the PLC, so I want to be cautious. I want to be able to, capitalize on the move. And this move, 6865, all the way down to, I would have got out like right here. I would have trailed my stop loss literally right here. That would have been a 10-point move right here, and I would have basically took it just a little bit lower for maybe 16 or 17. God, I can't stop saying 6, 7. But I would have basically got out of my trade right here after we seen a little bit of indecision when it comes down to the PLC area, because I know a lot of BS happens at this area. So that would have been maybe a 17-point move just off of this iceberg, just off of the buying literally rejecting at this area. There's being absorption with this iceberg, and then we have another iceberg that comes in underneath that shows that sellers are in control, and I would have just taken it back to the PLC. So that would have been a 17-point move. I would have been maybe a 1, 2, because I had a 5-point stop, so it would have been like a 2.5 risk to reward. And yeah, that's the iceberg. That's how you could have capitalized on that move. And if you were able to understand, if I was clear, be sure to like and share to someone that's having issues with order flow. If you want to learn more about order flow, then just DM me on Instagram. My Instagram is literally right there, so you can DM me on Instagram and we can definitely go over any questions, or I could just show you all the setups that I go through, because I have quite a few different setups, quite a few different things I look for. So hope you enjoyed. Be sure to like, share, and of course subscribe. Man, it's your boy Flexing IV, and I'm going.